Understanding why real estate works is the key to becoming really wealthy with real estate. Real estate has created more millionaires than any other investment class because it combines three things: leverage, cash flow, and appreciation. When you buy a property with a mortgage, you're controlling a large asset with a relatively small amount of your own money. That's leverage. Each month, your tenant pays rent. That's your cash flow. And over time, as property values rise and the loan is paid down, your equity grows. That's appreciation. Real estate provides both income and long-term wealth. It's tangible, stable, and often less volatile than markets that move minute to minute. For anyone starting out, the goal is simple: understand these three forces and make them work in your favor. Next, define your real estate goals. Before you buy anything, decide what success means for you. Ask yourself, are you looking for passive income through rentals? Or do you want to flip houses for faster profits? Or do you want to build long-term wealth through appreciation and equity growth? Your answer determines your strategy. If you value stability and predictable income, focus on rental properties. If you enjoy projects and higher risk, explore flipping or the BRRRR investing strategy. Buy, rehab, rent, refinance, and repeat. Every investor's journey starts with clarity. The clearer your goals, the fewer mistakes you'll make down the road. It's always important to have everything defined and stay on the right trajectory over the long term. Consistency pays, and over time it will lead to generational wealth. Next, get your finances ready. Start by checking your credit score, paying down high interest debt, and saving for a down payment. Most lenders want to see a credit score above 680, a 20% down payment for investment properties, and steady income. If you're not there yet, that's okay. Start small. Consider house hacking, where you buy a duplex, live in one unit, and rent the other. You'll learn property management firsthand while your tenant helps pay the mortgage. Build your financial base before expanding. The stronger your foundation, the safer your investments become. Next, learn the numbers. Every smart investor knows the math drives real estate decisions. Here are a few numbers you must master: cash flow, cap rate, cash on cash return. Rent minus expenses minus mortgage is your cash flow. Your cap rate is your net operating income divided by your property value. And your cash on cash return is your annual cash flow divided by your investment. These numbers reveal if a property truly makes money. Never buy a property because it looks nice. Buy it because the numbers make sense. Understanding these calculations protects you from emotional decisions and builds confidence when negotiating. Always be sure to choose the right market. Location determines everything. Look for cities or neighborhoods with job growth, population growth, and strong rental demand. Low vacancy rates, such as are all key indicators of finding the right market. These indicators suggest stability and appreciation potential Avoid markets that rely on a single employer or industry. Diversified economies create steady tenants and rising property values. Study local trends using tools like Zillow or city development reports. And remember, it's better to buy a great property in a growing market than a cheap property in decline. Always be sure to build your real estate team. Real estate is a team sport. You'll need a real estate agent, a mortgage broker, a property inspector, contractor, accountant, and an attorney. Never settle. Always make sure you get the right person every time. They always say you're a product of your environment. Well, in real estate, this is especially true. Make sure to get the right person. Never settle. That's a very, very big key to success long term. Each player plays a critical role in protecting your investment. Don't just pick the first person you find. Interview professionals who specialize in investment properties. Check the references, and always make sure you get the right person. Cannot stress that enough. Your team can save you thousands by spotting red flags early and ensuring every deal is legal, profitable, and efficient. Next, analyze deals like a pro. Before buying, analyze every deal as if you are advising someone else. You want to step back and take a clear look at everything, and just take your time, go over every detail step by step, and so that way you get a broad view, and you can just work your way back. Start with your end objective. Another key is use the 1% rule. Monthly rent should equal at least 1% of the purchase price. If the property's $200,000, you should rent for at least $2,000 per month. Always secure financing and close the deal. Once you find your property, compare financing options. Traditional mortgages, FHA loans for house hackers, and portfolio loans all serve different needs. Always get pre-approved before making offers. It strengthens your negotiation power. At closing, review all documents carefully. Make sure to do your own due diligence on everything involved. Confirm your loan terms. And last, celebrate. You've taken your first step into real estate ownership. Then finally, after closing, your focus can shift to management. Keep your property maintained, respond quickly to tenants, and track all income and expenses. Good management protects cash flow and long-term value. As you gain experience, reinvest your profits into new properties. This compounding effect, using one property to fund the next, is how small investors become real estate moguls over time. Consistency is the key. So once you start being successful, rinse and repeat. And over time, you can watch your finances continue to grow, and your net worth will continue to climb higher. And final thoughts: always understand that real estate isn't a get rich quick game. It's a long-term plan. Planning is everything, and consistency is key. So start with knowledge, act with patience, and let your experience guide you forward. If you found this helpful, hit the like and subscribe, and turn on notifications for more educational videos. And we'll make another one next week. Be sure to check it out, same time.